Today we will understand more about NPS, which is National Pension Scheme. What is the product designed as financial product? What are its withdrawal rules, both partial and at time of retirement? And last but not the least, its tax benefits. So first let's understand what the product is designed for financial. The key mistake which every individual or investor makes is that they only think about tax if it's a tax saving product and not understand the financial implication or what the product is designed as financially and whether it needs his or her investment decisions. Of course, tax plays an important role, but only after you analyze the product from its financial standpoint. So NPS is a retirement savings scheme or product which is just like a PF or PPF because its withdrawal is only allowed at the time of retirement. However, the key differentiator between NPS and PPF or PF is that NPS also invests into market, which is equity, and because of that you can expect higher compounded returns as against PF. When I say it invests into equity, it doesn't mean it invests 100% into equity. You have to select as an investor how much portion you want into equity and how much into debt. If you are confused or are not able to select the allocation percentage, then it also has an option of auto selection. So basically the auto selection selects your portion into equity and debt based on your age. As you grow older, your portion of debt will increase and equity will reduce. However, if you want to select otherwise, there is always an option to select. Also, there are two accounts, Tier 1 and Tier 2. So Tier 1 account is where the withdrawal is restricted and you can only withdraw up to 25% of the sum partially. The remaining you can withdraw only at the time of retirement. Also, that 25% withdrawal is also allowed only after 3 years of completion of service and only for reasons specified, which are like critical illness, child marriage, child education, etc. At the time of retirement, which is 60 years of age, you can withdraw not full but 60% of the corpus and 40% is converted into an annuity which you will receive just like pension every month. You can also delay your withdrawal of that 60% from 60 to 70 years, means further 10 years if you want to allow your corpus to grow further. However, further contribution to NPS will stop after age of 60. So those are the withdrawal rules. Also, it's completely tax-free at the time of retirement. Now, Tier 2 account. So Tier 2, there are no tax benefits, but at the same time, hence there are no withdrawal restrictions. It just behaves like an investment product without any restrictions. You can contribute and withdraw as per your needs, but there are no tax benefits. Now, last but not the least, tax benefits at time of investing. So ATCCD1 gives you tax benefit of 1,50,000, which comes under the overall umbrella of ATC. You can invest in any other tax saving investments or you can opt for NPS. However, under ATCCD1B, there is an additional 50,000 deduction, so that 1,50,000 goes up to 2 lakhs if you are a contributor to NPS. However, there is an additional benefit which not everyone are aware of, is ATCCD2, wherein if your employer contributes to NPS, then there is an additional 10% benefit given on basic plus DA. So say for example your basic is 1 lakh, then to the extent of contribution to NPS of 10,000, it is allowable as deduction from your taxable salary, and then you save taxes on that amount, which in this example will be 10,000 based on your tax bracket. Now, how to understand whether it's your contribution or employer's contribution to NPS? So, of course, if employer is contributing, then it will be as one of the component in your payslip or Form 16, but you will not get it in your take-home salary every month naturally, because the amount goes as a contribution towards NPS. I would also encourage you to opt for it if your employer allows to negotiate you the components of your salary, because one, it acts as a investment, regular investment, which helps you in building up the corpus, and second, it also helps you in further reducing your tax liability because of the section of 80CCD2. One important thing to note here is that this particular section is allowed both under new as well as old scheme. Usually no other deductions are allowed if you opt for new scheme. However, 80CCD2 is allowed under both new as well as old scheme. So that's it. If you have any other queries, please post in comment box and I will get back to you. Thank you.